Hey guys, welcome to the show today. Today we are joined by Ellis Hammond. Ellis has led Symphony Capital Group through the acquisition of more than 87 million of commercial multifamily real estate and is the host of the Kingdom REI podcast and the Future of Real Estate podcast. He's also the founder of Kingdom REI, a mastermind and coaching community for faith-driven real estate investors who want to multiply their real estate portfolio, income, and impact through joint ventures and collaborations. Ellis's career began as a full-time college pastor. He saw firsthand the need for marketplace leaders focused on creating profit to support impact ventures like his own. He began purchasing real estate in 2018 and began to build a team to support his growing portfolio. Ellis, my friend, so good to have you on the show.
Hey man, what's happening? Great to be here.
Tell me, how did you go from being a full-time college pastor to getting into real estate and kicking off your career?
Wild journey, man. The Lord is good, dude. I would say honestly, in some ways, the same reason I went into college ministry. Like my faith is a massive part of who I am and who I've become. My faith in Christ, and even my marriage, with my wife, man. We've always said like faith is such an adventure, right? As we get to follow God. By the way, my daughter's crying upstairs, part of the adventure. So you guys are going to hear that in the background. Sorry, that's just part of it today.
No worries.
But about 4 years into our ministry, I remember a young man came to me. He was on our team, and we were in college ministry. We were raising every dollar that we needed to kind of support our ministry, us, my family, their families. And so funding, was just part of our life, like fundraising, whatnot. And so one of the guys that was on our team, he had been a part of our ministry as a student, had graduated, had come on staff with our team, and we were beginning to grow and, thought things were doing well. But this young man came to me one day and he looked at me. I remember him. I could literally saw him coming across the lawn. I'm like, this is not good. Because this guy's typically like really upbeat and just a fun dude to be around. And I remember him getting over to me. I'm like, man, what's wrong? Like, just go ahead and tell me. He's like, what are you talking about? I'm like, dude, it's all over your face, man. All over your body language. He's like, well, I'm like, what is it? He's like, Ellis, I don't have enough money this month to buy groceries. Like, I don't have enough money coming in to put food on the table. And that drastically, I'd say that like that changed my entire outlook on money, on kind of the mission of my life. Because up to that point, man, I really just didn't want anything to do with money. I didn't want anything to do with capital. It had such a negative impact on my life up to that point. My parents being divorced, and my dad always complained about money. My dad died at 55 years old, and he complained about money. That whole last 15 years after he retired, it was always a sword between him and my mom. I hated it, dude. I just was like, I don't want anything to do with it. I never thought I'd be a good steward of it. So I went into ministry. But it was in that moment, man, where I realized I had really missed the point, and that this dude was trying to live his life for a massive purpose. And yet he still needed money to serve it, to really live out his mission and his purpose. And so that was a wake-up call where I'm like, I got to figure out this money game too. I cannot just ignore it my whole life. And so, by the way, all that I just shared, it took me a couple of years to kind of absorb and figure all that out.
Sure, yeah.
But it's really clear to me now why, right? And why I'm so passionate about this idea of capital creation, capital multiplication, and capital stewardship, and what we do with it. So long story short, man, that was the turning. I share all that backstory, but like without that, I wouldn't be so aggressive of what I do today. And so, we just learned about me, dude, figured out real estate. I remember it's a real quick story. I know you've asked me one question. I'm just going to keep going, but I think it so ties it in. I was hungry. Like, okay, now what? And I heard a radio ad. The radio ad was come learn how to build wealth through real estate. And that 2-hour seminar, which was actually like a upsell into like a fix and flip type model, it changed my life. I didn't end up doing that route, but it changed my life because it showed me that real estate was actually not the end game to wealth, but it actually was the starting point. And that was the beginning, man. We bought a duplex, bought an apartment building, and we'll never look back.
Wow, that's awesome. Quite an interesting transition for sure. So, I mean, given your background, and I know you and I really share a similar philosophy around, kind of a holistic view on wealth building and everything. But what would you say in terms of like the psychology of money, right? What does wealth really mean to you?
Yeah, I think That's a great question. I think for me, wealth is options, like having options, having the ability to choose is what wealth is to me. And it goes far beyond capital. Because when you're wealthy, that's way beyond money, because there's a lot of rich people, man, who don't have options, right? There's a lot of people who have really big corporate jobs and W-2 opportunities, or CEOs of big companies, and they don't have an option to go to work. Like, they don't have an option to go spend a Wednesday afternoon with their families if they want to, right? They don't have the option to take a week off and go take their kids on spring break. That's not wealthy, in my opinion. Like, you might be making money, but dude, you're not wealthy because you have no optionality in the way that you spend time with your family, and where are you going to go spend your time. And so for me, wealth is much more the ability to create options. So it's interesting, like my net worth might be, or let's put it this way, your net worth might be 10 times more than mine. However, in some ways I could be more wealthy than you because of the way that I've structured my business, my companies, my life, the way that I generate income, and I'm in control of that. And for me, that's really important.
Yeah, so well said, Ellis. I think it is really multidimensional, right? And covers a lot of different aspects. And people, often people get very confused with the topic of being rich versus wealthy, right? And that's why, we always like to talk about on our show, like really being wealthy and being, creating wealth. And it's really a mindset, right? It starts with a mindset. And, what would you say in terms of having that wealthy mindset, having a billionaire type mindset, what does it really take?
Well, I'm still learning, man. I'm definitely not there yet, but I study a lot of billionaires and I like learning about them. And I think that's the first thing, where I'm on my journey. I mean, I passed the $1 million mindset now, and the $1 million mark of what it takes to, and also become a millionaire, which is even crazy to think about, pastor to millionaire. That's a good headline for you. But I mean, that means nothing for me, man. Like, that's net worth. It's tied to, what does that even mean? And what does that even matter? What's probably more important is what the mindset I've had to create and evolve in order to become that and to want to go beyond that. And I do think part of it, man, is just like being open-minded. Like, I don't know anything. Like, even
Right.
in this
Right.
position, like, I still so much. I'm so hungry to just learn and see. I think what's so interesting about the guys that I really respect who have built massive things, what I pay attention to, man, is that, like, all the guys that, I don't know if this is across the board, but for the most part, what I see is that the guys who've really made it, they're still hungry, because there's something about billionaire mindset is like, it's really never about the outcome. It's more about who you become in the process, right? And there's always more, kind of another level to grow and to I mean, I think joy is progress. You know what I'm saying? So, like,
Yeah. Yeah.
that's that
100%. Yeah.
mentality, man. And I really truly believe that. I mean, I think that's true in the Christian faith too. Like, yeah, we're saved by faith, and that's kind of maybe a one-time event, but like, we're there's also this sanctifying process, right? We're being made more like the image of God as we grow and as we're sanctified, and that's a lifelong journey. And the more you are sanctified, the more that you enjoy God, right? And so, it's the same journey, man. And I think that's so true in wealth building, in kind of evolving as an entrepreneur, as an investor. Is what is the next level? This is a long conversation, and some people say, well, I don't know. I would say my wife is there's a good balance to of contentment, and there is a fine line, because I do think I probably would struggle with not being content with where I'm at sometimes too, and that's probably a flaw of mine. I have a good wife to kind of keep me at bay,
Yeah. Yeah.
but I don't know, man. I also think, though, there is for those who are the ultra successful, there's just a little discontentment there, or maybe a lot of discontentment there, for good or for bad, dude. And I probably got a little bit of that.
Well, that's the entrepreneurial mindset, right? Where you just cannot sit still, and
Yeah.
you must be growing. And I think this is, Ellis, this is really, it's all about like having this growth mindset. I mean, how many people do we meet in the course of a day, a week, a month that you could talk to them about diet, you could talk to them about religion, politics, and their views are already shaped, and they're not bending at all, right? So they have this belief system, from maybe their childhood or the people that they're around, the media they're consuming, and they're not willing to take on new ideas. And what I love about an entrepreneurial community is a lot of entrepreneurs are really focused on solving problems, right? So they're always asking questions. Even when you fix one problem, okay, what's the next? Or it creates a different dynamic, listen to Elon Musk talk, right? It's all about solving problems that in some cases haven't even been thought of before. So you're absolutely right, is you need to be an inquisitive person. And I think, the way we come at this thing in terms of like building wealth, it's like, we were asking questions about all this conventional wisdom that was out there that it's like, it doesn't really make sense,
Yeah.
and you start to look under the covers and get more into it. And it's like, hey, there's a much better way to do this, right?
Yeah. 100%. Yeah, that's a whole topic, man. We could get into that, but I think you're right. The key there is growth mindset, and being around other people who are growth minded is so key, and especially as it comes to investing as well. I mean, you think about the majority of folks in this country work. Maybe people listen to this episode, and maybe this will be a good wake up call. The majority of people work, majority of their lives working for a dollar, and then think about this: will give that dollar that they're working their whole life to someone else to manage or to look over. Like, I talk to a lot of investors. Like, I believe in what we do, man. We're crushing it. Like, we're going to make good returns, double-digit returns. We'll beat your financial advisor in the stock market all day long. However, I'll talk to my family back home, and I'll be like, guys, we're making so much money in our deals. Like, I promise you, I'll beat your financial advisor. And their response is, Ellis, sounds good, but we just like our guy. Like, we just trust our financial advisor. And this is their response.
Yeah.
It's how I've always done it. That's literally what I hear over and over. I'm like, and I look at their life, and I look at their friend's life, and it's all the same. And I'm like, there's a contentment in ignorance.
Yeah.
Dave. And that's okay. And truly, I say that with a full heart, like, that's okay. That's not me, and the investors that we work, that's typically not them either. And I think that's the waters that we swim in, is just like, we're a little discontent with what the world's given us, what traditional wealth building advice has given us for the last 4 decades, 5 decades.
Yeah, 100%. So, what do you think's really holding people back?
Well, part of it, man, is a mindset that has been beaten to people through big agency, through big institution, through Wall Street. It's not necessarily their own fault. This is what has been beat into us from the media and from government and for so long, that the middle class, dude, was a dream. You think about this, like, to be middle class where you had a home ownership, that was options, dude, back in the day, where most people had to go work in a warehouse or in a factory, and getting middle class was the dream. Well, today, man, middle class is bondage, bro, because you lose your job and you no longer can afford all your big payments, right? Or you get sick and can't work, then what? So, like, what used to, I think, be the thing that was promoted and it was the American dream, now, truthfully, with inflation and with just the way things cost today, dude, the middle class is in danger. Like, $1 million, truthfully, you're still poor. Just to be real, like, you're vulnerable is my point. No, you're not poor. There's poverty. There's poverty, and then there's poor, and you get my difference there. But, like, you're vulnerable, and
Right.
I think that is what I think maybe is keeping people holding back, is like, they don't realize how vulnerable they really are, right? At that, and I think that needs to be a wake up call.
Yeah.
And I think we're getting there. I think we'll get there.
Right.
COVID.
No.
COVID was, our government did a lot during COVID, man. We could have seen a lot of blood on the streets during COVID.
Yeah.
Government bailed out the middle class. and
Yeah.
good for them.
Yeah. No, I definitely agree on that. I think it's education, and I mean, heck, in when Robert Kiyosaki, right, came out with his book, right? I mean, his whole, tenet is financial education. And
Right.
it is interesting because, you know, we're not able to learn these concepts outside of any academic arena, right? They're not taught, even if you're a doctor, a lawyer, whatever your profession is, you're not really taught these things. You're primarily taught it as an entrepreneur going through it, trying to scale a business and survive and everything. And you learn how to, read a financial statement and a balance sheet and what makes things work. But taking control of it is a whole different thing.
And I think that's so true, man. And that's what I talk about. Like, most people just trust their financial advisors. I don't mean you shouldn't have somebody steward your money. Like, dude, if you're not a real estate entrepreneur, you're like, don't come and start a real estate business. Give me your money or give Dave your money and let us go invest in real estate for you. However, you still are responsible for that. Like, you're like, and that's what I mean, in the sense that, you wouldn't know about alternative investing. I mean, and here's the thing, and you just have to like take responsibility and ownership for that. I mean, I sit down just last week. I was sitting down. It's a great example of why I think it always, at every level, you have to pay more attention. I mean, I sat down with an oil and gas investor last week, and he was telling me all about the space, and they got more money than they know what to throw at right now. And I just was telling him about the benefits of multifamily and about bonus depreciation, right? How we can accelerate depreciation through real estate, and why we use leverage, because leverage allows us to have a little bit of equity in, but take advantage of 100% of depreciation of the asset, which is massive. So we can only maybe have 20% of the equity, but we're getting all of that depreciation, and what that meant for his portfolio and how we could use that to offset other passive income. And if that is over someone's head right now, that means you should probably go figure that you should research what I'm talking about, right? Because if that didn't just click with you, then you were missing out on something really key for your portfolio right now. And so was he. And he's like, I never knew that. I'm like, this dude's a multimillionaire. And he's like, I never knew that. He's like,
right.
Okay. And so for him, it was a light switch. And so, he's not going to necessarily go start a multifamily company. He's going to maybe start investing with me. But the fact that he took the initiative to sit down with me and try to learn something that he had never learned about really said a lot about why he is in the position that he's in today.
Right. And he was open-minded to asking the questions and learning, despite, where as far as he had come. And I think,
100%.
a lot of people just, aren't in that position to ask the questions. And, you're really right, right? You don't have to be an expert. And that's what I love about the space of real estate, right? And private equity, is that this is a team sport. Right. So there's various different roles to fulfill. You've got acquisitions, you've got asset management, you've got investor relations, property management. There's so many different components. But when you talk, like you were just talking about leverage, you're able to get so much leverage, from a financial perspective and buying the asset, but you also get like phenomenal people leverage. Where can you get a double-digit return that you're investing with professional investors that all they do is acquisitions every day? So they have relationships for the past 15 years, right? To even uncover the deal you just found. I think that that's really, really powerful. But as you educate yourself, in addition to that, it's educating yourself so you know how to ask the right questions.
Yeah. Yeah, I agree.
Ellis, do you have a personal wealth strategy that you follow yourself?
Is it written down? Not really. I mean, it's not very complicated, Dave. I think we were talking about this last time. My wealth strategy, and the wealth strategy I teach to everyone that asks me about, Ellis, how do I build wealth? 4 steps, like super simple. Step 1, you need an income stream, and you need an income stream where it doesn't have a ceiling, meaning it's tied to your effort or your ability to create. Unless like you're working a W-2 and you can make several $100 million a year. But like if you're tied to a something, man, that's making you $50,000-$60,000 a year, and there's no, and that's your ceiling, like you need something else. Like that's just the reality. You're never going to get wealthy making $60K a year. Said, it just is. You need a different vehicle. And if you say, hey, well, I don't, what does that mean? Well, then maybe you need to go spend your nights and evenings getting a skill or building a skill so that maybe you can make yourself more valuable to someone else, or another company or a, an entrepreneurial endeavor so that you can go lift your own ceiling. So step one is, you need kind of that cash flowing, that cash vehicle, the cash producing vehicle. Step two is then you need a vehicle that can multiply that capital, right? I mean, now that you've made it, you need a vehicle that protects and multiplies your money. That's why you and I like real estate, because it is, now that I got it, now that I'm making it, okay, first, is that vehicle, here's the other thing, that vehicle might be your own business, right? So for a lot of entrepreneurs, I'm not saying real estate is the end all be all. I'm just saying it's a predictable, and typically that can multiply your money faster than most W-2 people can, right? But for an entrepreneur, that vehicle might be their own business or other businesses. And so for a lot of my buddies and friends, they're investing back into their business because they can put $1 into that business and get $4 out. That's a pretty good return, right? But there's a cap to how much they can invest back into their business. And so they'll take the rest of that and put into real estate with me. So, a vehicle that can multiply that money. Step three, we've already talked about, is leverage. I think if you can, the wealthy lever, take out debt, fixed debt or low interest debt, and they invest that into assets, businesses, real estate, right? Stuff that produces more income, appreciates more. And then the fourth step, dude, is just repeat. I mean, like I said, it's really three, and then the fourth one is just keep doing that.
Yeah.
So that's my journey, man. That's my wealth strategy. I have two companies. One is a company that makes cash, and the other company is a company that buys assets. And that's it, dude. That's all I do. And that's my wealth building strategy. I take my cash and I put it in my assets. And then I just keep that cycle going, man. And I use leverage to buy those assets. And that really is about all that I do. I do own Tesla stock. That's been really good for me because I like that company and I like Elon. I think he's the ultimate innovator, and I'm betting on Elon. And that's it.
Yeah. So tell us about your portfolio allocation, just broadly,
it's so
broadly
simple, man.
speaking.
I would say probably 25% is in Tesla, probably 5 to 10% is in Bitcoin. And I've even kind of started to scale out of that a little bit just because I wanted to learn it. And so I was investing a lot into Bitcoin, and I still think it's a great asset. I understand it a lot more where I think I know when to buy in and when not to buy in. And right now I'd rather be out of it. And then the rest is real estate, multifamily deals in cash. That way, for opportunities, I need, as an operator, I need a little more cash maybe than most because I need it for the business and I need it for hard money. I need it to be able to put up money for deals. So I may be a little bit more liquid than others because, in order for us to secure these assets, we have to have cash on hand, or we can't, or I got to go give equity to somebody else who has cash. So, that's kind of pretty much it. I mean, I really truly am building wealth alongside of our investors.
Yeah.
And we're all
And
in.
so Ellis, what does your strike zone really look like for purchasing assets?
Like, what is our
Criteria,
explain?
buy criteria?
Yeah, we are strictly multifamily investors at the moment. We're typically $20+ million multifamily assets. We've bought in a couple markets past 8 months. Really like the Midwest, particularly Kansas City. True value add play there. I mean, that's kind of a more of an equity play for us where we have a really clear value add plan model where we're buying kind of at a low cost basis, putting in, a pretty good chunk of money per door, call it 15 grand a door, right? And then we might be selling it for 50 or 60 grand more than we paid for it per door. So it's a really clear value add play where we're just kind of multiplying money. And then the other market we're really in love with right now, even though it's not anything new, it's Dallas. I mean, it's just a great place to be investing in. I mean, a lot of jobs, a lot of people moving there. And so where the play in Kansas City maybe is to buy older assets where we can kind of do the value add play. Honestly, the goal in Dallas, man, is we want to kind of buy upstream. We want to buy nice assets where, we can kind of, we're getting this really good organic rent growth, and we're kind of hedging against who knows, right? Like a dip in the economy or whatever. I just want to be buying upstream in those type of markets because I know and more money's coming in that market. Rents can continue to steadily go up. And at some point, there's going to be kind of like I can only pay so much, right? Especially in these lower class assets. Dude, I mean, somebody on a fixed income can only make so much, right? And their income is not going to go up $30,000 next year. But maybe the nicer you go, that's not necessarily the case. Like there's still room for their incomes to grow, right? They can pay more in rent. They're looking for nicer facilities. So that's kind of our strike. That's our sweet spot there in that market, and looking to buy more deals, what I would call upstream or kind of nicer assets.
Okay.
And I think that's better for investors who are looking for. So if you're listening, like Kansas City deal, a lot of my young buddies are in our Kansas City deals because they're like, dude, I just velocity of capital. Like I'm willing to kind of take some risk. I just want my money back in 2 years because I now want you to double it. I'm not saying we're going to do it every deal, but that's kind of the play. It's like, let's almost flip these deals. Dallas is probably more of a traditional real estate investor who wants good cash flow, who we're going to kind of hit that 12 to 15 to 18% a year mark on. We're either going to sell or refinance and return a majority of the equity in about 4 or 5 years. And then we'll decide what we want to do with the asset. Probably sell it, but maybe we hold on to it depending on kind of where interest rates and stuff are. So that's our play.
So you don't think Dallas is overvalued right now?
No, dude, I don't. I mean, no, I think it's amazing what has happened in the last 2 years in Dallas and where asset prices are compared to 2 years. But the market supports it, man. I mean, you think about where Dallas is, most people's rent to income ratio is still in the kind of mid 20s, right? Still very affordable. And so I think that's key to look at. There's still organic renewals, meaning on most of the assets we tour right now in Dallas, they're organic renewals, meaning when people come up for renewals, 15% on rent growth. That's what they're getting today. And will that, are we underwriting that for 3 years? No. But I think, and I believe that can sustain for a while because of the affordability of that market traditionally. And are people going to get pushed out of that market? Yes. Is there a lot of folks that live in Dallas for a long time and maybe like, this is just too expensive now? Yes. But guess what, dude? There's a lot of people that got pushed out from other markets that are moving to Dallas. That was a lot more expensive than what they're paying now.
Right.
And so, yeah, I think Dallas has got a long run.
Yeah, there's just been so many major corporate relocations there too from California.
Yep. I mean, I'll give you a great example of why I think Dallas is so interesting to me. So my neighbor who lived literally right there a month ago, he's the CEO of what's like the fastest Inc. 5,000? Is that like fastest 5,000 companies in the nation?
Yep.
CEO and founder of one of those companies. I won't say who he is in the name of his company. His company has $17 million in cash sitting in the bank right now. He was renting. Okay, number one, he was renting because he was priced out of home ownership in California and was deciding to rent. He picks up his family and his company, moves everyone to Dallas because that's where it's more affordable. So that's who your new tenant is in Dallas.
Yeah.
Right? That's your new homeowner in Dallas is the California CEO of 17 million. And that's just one example. And so why I think Dallas is like, it's still affordable in the grand scheme of things. And why Dallas maybe wasn't that attractive 10 years ago is because it didn't have the scene that it had, right? It didn't have the retail and the shopping and the restaurants and the diversity, a bunch of rednecks, where like, that's not the case anymore today.
Yeah.
Don't get me wrong. There's still a bunch of rednecks in Dallas. I am from South Carolina. So, in some ways I am a little bit of a redneck. So that's not being offensive to anyone. I know my people and I know what Texas is.
Yeah. What would you say if you were to give just one piece of advice to listeners about accelerating their wealth journey? What would it be?
I mean, figure out where in that wealth journey that you're at. For a lot of folks, it's the first step is, if all you have is 50K and you don't know quite how to replace that yet, like if you invested that 50K and you don't know where your next 50K to invest is coming in at, then you got a cash generating issue. You don't have an investing issue. You got a cash generating issue. And so again, it might be skills, mindset. Take that 50K, and go invest that back into education. I mean, that's what I did. It's what I continue to do. I mean, I spent 6 figures last year, Dave, just on myself, like education, mentorship, coaching, all these things, right? So I believe us to be assets to invest in. So don't overlook that. I think that's maybe something to overlook, and then but if that's not an issue, I'm like, just stick it out, like I mean, my goal, every year is like, I want to put 6 figures into our deals, multiple 6 figures into our deals if I can. I encourage my investors, don't think about investing in this deal as kind of a one-time thing. I'm like, think about it from a portfolio perspective each year. Can you give me 25% of your portfolio or 25% of your investable income every single year to put in these deals? Because the repeating of that, right, and us being able to take that equity, multiply it, and put it in the next deal, and multiply it, that's going to be life changing. And so, know what your strategy is, commit to it. And I would just say this, make sure you pick the right vehicle, because if you pick the wrong vehicle, and you spend 10 years doing it and you look up and like, well, that was silly, you're going to regret it. So make sure that you're picking a vehicle that's proven. That's why we love multifamily, right? I mean, even if we're not, let's say this amazing run in multifamily of, 20-25% a year stops, and we are down back to 12 or 15% a year. Okay. Like, you know what I'm saying? Like, we're
Yeah, no,
still
the
doubling money, man,
fundamentals,
like
the
every 5 years.
fundamentals are just so strong,
Yeah.
right, in multifamily, right? I mean, just from the supply demand side, and,
Yep.
and it's forecasted that way for the next 10 years.
Yeah.
And you're absolutely right. Even if the IRR starts to come down a little bit, where else can you get that multiplier effect on your capital?
Yep. So I would say those two things, make sure you got a good cash generating vehicle, and then make sure you're picking a great investing vehicle. Bigger is better. I mean, that's why I don't like single family duplexes. It's just the wrong
Actually,
vehicle.
that's a great question. So can you elaborate on that a little bit more, Ellis? Because you've got a lot of experience from there. You kind of started there and then you got into multifamily. So can you just elaborate on that?
Well, it's a hope, man. You can't build wealth on hope. And unless you're going to be actively, I mean, I'll tell you what a duplex and single family is. It's a great step one.
Yeah.
Meaning, if you can flip those deals, like you can go in there and you can add 20K and get 50K out, that's a great first vehicle.
Right.
All the guys I know doing that big time are taking their gains though and putting it into commercial. Like,
Yeah,
you know what I'm
exactly.
saying? And so I think I have nothing against that route. Just know where it is in terms of the my 4-part process, right? It's not number 2. Like, it's for sure number 1. And the guys who are doing that and really building wealth there, they know that. Like, that's their money generating vehicle. However, it's not their, unless they built systems and processes so great and so big that they can step away. For most of them, man, it's the money making activity. But then they still take their gains and putting that into something that can be more passive and can multiply and protect that capital. So, I just think it's knowing what that is or where that is in the process. I think flipping deals, if you're, as a secondary income, is a great strategy. I think we're still in a great market, dude. If you can find people who want to sell their house in today's market, you can make a lot of money. So
Right.
like, I think it's a great strategy, but know that that's step number 1, not step number 2.
Yeah, it's early on in the cycle because it doesn't really scale, and most people are doing that. Like you said, if you have that cash creation issue, that's a great way to do it when you start. Like my daughter's doing that. She's 23, right? But you're able to
Yeah.
do that. But at some point, it just doesn't scale. You can only manage so many properties.
Yeah.
Right.
Unless you're just a great, you can scale into a business. Like, don't get me wrong. There's a lot of guys who do that really well, and it could become number 2, but it just, I mean, again, we're talking about massive scale with teams and systems and processes. That's very few people who are doing that.
Right. Right. Ellis, it's been great having you on the show. Where can folks find you? How can they connect with you?
Yeah, thanks, Dave. This has been really fun, man. I always love getting a chat with you. Listen, we're trying to build a multi-billion-dollar portfolio, and would like to do that, in this decade. And so we want to connect with anyone who's hungry to do that. That's investors, that's deal finders, that's capital raisers. I know one thing, man, we cannot do this alone. You know, it really does kind of take a tribe. It's why we've tried to build a community around everything that we're doing. And so symphonycapitalgroup.com, that's symphonycapitalgroup.com is our website. And there's a contact form there, man. I encourage people to contact me there. And then on Twitter is probably the best way you can interact with me. Ellis Hammond underscore is, or maybe it's Ellis. You can look me up and find me there. But my Twitter account is Ellis underscore Hammond. And so hit me up on Twitter. Those would be the two places.
Awesome. Ellis, thanks again for coming on the show today. Always such a pleasure to connect, and thanks for providing so much value to our listeners.
Yeah, loved it, man. Thank you.
Awesome.